I might pump, but I don't dump.
Bitcoin, this digital currency that's out there that people say, oh, it might be the next big thing. What do you think?
I think it's rat poison.
Gives you a good bottom when you get a large player over-levered that goes to zero.
And in the first place, it's stupid because it's very likely to go to zero.
Who trades it? If you're stupid enough to buy it, you'll pay the price for it one day. I've also told people that it can trade at $100,000 before it trades to zero.
Nobody's ever lost money investing in Bitcoin for 4 years. Bitcoin's performed 10x better than anything else. Gold's down 10%, NASDAQ is flat, Bitcoin is up 86% since that time. Over any time frame, 2 years, 4 years, 8 years, Bitcoin's the best performing asset. I can't come up with a better idea. If you're only going to invest 10% of your portfolio in gold, what are you going to invest the other 90% in?
Welcome to the show, Cash Crypto Credit, where you find the latest financial news and information. But remember, this is not financial advice, just for your entertainment only. Let's get right into it.
Trading cryptocurrencies, it's just disgusting. It's like somebody else is trading turds and you decide I can't be left out. In my life, I try and avoid things that are stupid and evil and make me look bad in comparison with somebody else. And Bitcoin does all three. and in the first place, it's stupid because it's very likely to go to zero. The second place is evil because it undermines the Federal Reserve System and the national currency system, which we desperately need to maintain its integrity and government control and so on. And third, it makes us look foolish compared to the communist leader in China. He was smart enough to ban Bitcoin in China. And with all of our presumed advantages of civilization, we are a lot dumber than the communist leader in China.
I'm used to asset classes where, like a farm, where they have output, or a company where they make products. Have an asset class that's 100% based on sort of greater fool theory that somebody's going to pay more for it than I do.
The computer science that's behind Bitcoin is a great triumph of the human mind. That's what captivates a lot of these people. They've actually created a product that's hard to create more of, but not impossible. Now that is very peculiar, but they've managed to do it. So a lot of the computer science people love it just because it's such an extreme achievement of computer science. I, of course, have no interest in that because it's not my subject. And I see an artificial speculative medium that people are buying just because they think they can sell it to somebody else at a higher price, even though it inherently has no intrinsic value. And so I regard the whole business as antisocial, stupid, immoral.
Immoral?
Yes,
Why
immoral.
is that? Why?
Why would you trade? Suppose you could make a lot of money trading freshly harvested baby brains. Would you do it, or would you say that's immoral? You wouldn't trade them, would you? It's too awful a concept. Well, to me, Bitcoin is almost as bad.
Down the road that the next genius ideas are going to come from this. Any college, any university, any engineer, they all want to work on the chain.
Well, on that last point, let's talk about crypto-focused businesses for a moment. Coinbase this morning announcing that they're cutting 18% of their staff. Gemini had a similar announcement, as did Crypto.com. MicroStrategy is down 75% year to date. Are crypto companies uninvestable at this point?
No, I wouldn't say that. There's two categories of crypto companies, ones that use leverage and ones that don't. Now, when you have a very volatile asset and you have the fortitude, I'm going to use that word, to use leverage to enhance your returns, you also run the downside risk of what happens when there's a major correction, as is occurring right now. You can get caught offside pretty quickly. And so Celsius is a good example of that. And I don't want this to sound trite, but let me explain how bottoms are made in any market. I don't care if you're in equities or in debt or in crypto or in real estate. You always need a big player to go to zero. That always helps, whether it's long-term capital or whether it's one of these crypto infrastructure companies. I would like to see, and I don't want this to happen, but it always gives you a good bottom when you get a large player over-levered that goes to zero. And that always tends to be the beginning of the rebuilding process. So if you have to sacrifice someone who used too much leverage, and it's always leverage that does this. Somebody's over-levered, positions are complicated, they're not transparent, they're not liquid, and they go to zero. Someone is out there on the brink of zero. That's okay. In fact, I'd argue that's a good thing when we get it. Now, do we get it this week? Do we get it next week? Someone's going to zero. I don't know who, but it'll be great for everybody else that survives because everybody will learn from that. And that's what I like about a washout, an event. And I think we're due for one in crypto land. And I don't know who it's going to be, but I guarantee you 100%, I've seen this movie before, you will learn later that somebody put on a heavily levered position, they got wiped out. And it's good.
What do you make of what you've watched play out this week and where there can continue to be some footing going forward from here?
Yeah, well, thanks for having me on. Really a lot to talk about, obviously. I think, what has unfolded with these unstable stablecoins, such as UST, was entirely predictable.
All right, let's see how this breaks down. Let's tracing the falling dominoes. So Terra USD fell first, then 3 Arrow Capital filed for bankruptcy. They were financing Voyager, which filed for bankruptcy. Then BlockFi, which filed for bankruptcy. And they are all bailed out by the new kid on the block, FTX, from Sam Bankman-Fried. All right, let's see how this breaks down.
2018, Bitcoin hitting highs of around 19,000 before a drop down to 3,000, which was around the bottom, an 80% drawdown. This time here, we've got at the moment a 70% fall, and there are differences in what has happened this time around versus last time. And 3 major issues. Firstly, the macro situation. Secondly, the collapse of a very key stablecoin. And thirdly, the massive leverage and lending we've seen in the sector. I'll just dig into the macro economy first. This time around, we've got rampant inflation and Fed on the tightening cycle. We've got the correlation between Bitcoin and stocks, and we know stocks have had a tough time, and that's why you're seeing Bitcoin and other cryptos under pressure as well, particularly as the macro environment worsens as well. Now, secondly, the stablecoin issues. I'm not talking about those stablecoins that are backed by reserves like Tether or USD coin. I'm talking about Terra USD, an algorithmic stablecoin that massively collapsed, bringing down its sister token Luna with it, and that was big and sent shockwaves through the industry, really starting a lot of this contagion. 3 Arrows Capital, a company I'll come on to shortly, had exposure to Terra USD, and that's where we begin to see this contagion story playing out. But the biggest difference between 2017-18 and now was really around the leverage and lending picture as well. In 2017-2018 cycle, the leverage very much was going to retail investors via exchanges. Those positions, when they couldn't meet the margin calls, were liquidated, and that was the end of the story. This cycle, everything is more interconnected. I'll kick off with Celsius. That was a company you were just talking about. This was a company offering about 18% yields to users who deposited their crypto with Celsius. What Celsius would then do is take that crypto, lend it out to other players in the industry in return for a high yield, and then try to give that back to their customers. But in doing so, took on risky bets and a lot of risk as well. They tried to pocket that yield to give back to investors, but the crash really tested that business model, which ultimately failed. The company having liquidity issue, paused withdrawals, and now has filed for bankruptcy. Next, 3 Arrows Capital, a major hedge fund in the cryptocurrency space, known for bullish, highly levered bets as well. Now, they had several counterparties, Genesis and BlockFi. They reportedly missed margin calls for. They defaulted on a $660 million loan from Voyager Digital as well. They're exposed to the Terra USD collapse, and that really caused a lot of contagion across the industry. They plunged into liquidation, and now people are trying to get their money back, with the founders reportedly in hiding. And that's the big difference, the contagion we are seeing spreading across. Voyager Digital now having to file for Chapter 11 bankruptcy in the US, and there are others suffering losses. I think one thing we can say that this cycle really has been characterized by poor risk management and some unsustainable business model, guys.
Always. Listen, love to just start off on, we just said it, I think it's 129,000 roughly, a coin, average price of 30,700, spent about $4 billion on it. One would anticipate if the price stays where it is, that's going to cause a significant write-down overall. At least your auditors may ask for that. You know, you've talked for years about the financial flexibility owning all that Bitcoin gives you. I wonder if you believe it also works in reverse.
No, I think it's been a net positive. We back-tested our strategy against every other alternative. And if you roll the clock back to August 10th of 2020 when we embarked on this journey, Bitcoin's performed 10x better than anything else. Gold's down 10%, NASDAQ is flat, Bitcoin is up 86% since that time. Over any time frame, 2 years, 4 years, 8 years, Bitcoin's the best performing asset. I can't come up with a better idea.
You can't come up with a better idea. Does that mean that you would actually consider buying more at these prices?
Yeah, I think if you think about Bitcoin, if your time horizon is 1 month, it looks like a volatile risk asset. But if your time horizon is 10 years, it looks like a risk-off store of value asset. So the crossover point is 4 years. Nobody's ever lost money investing in Bitcoin for 4 years. And if you want a surrogate for the book value of the Bitcoin network, it would be the 4-year simple moving average. The simple moving average of Bitcoin over 4 years is about $21,685. Bitcoin's only touched that point a couple of times in its history, and those have always been great buying opportunities. Right. This is Bitcoin's on sale.
We're touching that. We're touching that price right now. It's funny you should mention it. So, is it a great buying opportunity?
Absolutely. Bitcoin's backed by the most powerful secure computer network in the world. If I gave you $100 billion, you can't reproduce it. And it's beyond a nation state attack or corporate attack. So once you understand that and the fact that it's a singularity, there's nothing like it in the world, then yeah, this is an ideal entry point to get into this thing.
All right, but you've also taken on debt in order to actually accrue that position, which does incur a certain amount of risk, doesn't it? I mean, I know, you've got, 6 and a 1.25 senior notes. They're, 2028. You've also got maturities that are out there, but there's concern in the market about margin calls, about collateral calls, certainly on some of this debt. Can you clarify for us exactly what those are under the covenants that you currently have and how they may impede your financial flexibility?
Yeah, sure. On a multi-billion-dollar balance sheet, we've only got a $200 million loan that we have to collateralize, and we're 10x over-collateralized on that right now. If the market traded down by a factor of 10, we've got cash and we generate cash flow. So this has all been, the margin call thing is much ado about nothing. It's just made me Twitter famous, so I appreciate that. And the Twitter trolls love to beat up on me because it gets them engagement. As for the company's balance sheet strategy in general, we borrowed $2.2 billion at a blended interest rate of 1.8% before interest rates doubled. Junk bond indexes from 426 basis points to 820 basis points. Mortgage rates have doubled. If you had a chance to grab $2 billion at 1.5% interest, it seems like a reasonable thing to do, and I'm glad we did it. Most of it is unsecured debt. 1.7 billion of it is unsecured. The 500 million comes due in 7 years after we borrowed the money. So we feel like we have a fortress balance sheet. We're comfortable, and the margin loan is well managed.
I care less about Bitcoin. I don't know why I said anything about it. The blockchain is a technology, which is a good technology. We actually use it. It will be used for a lot of different things. God bless the blockchain. Cryptocurrencies and digital currencies, I think are also fine. JP Morgan moves $6 trillion around the world every day. We don't do it in cash. It's done digitally. If it can be done digitally with the blockchain, so be it. But it'll still be a dollar cryptocurrency. What I have an issue with is a non-fiat cryptocurrency. Dollar, so crypto, sterling, euro, yen, they're all fine. I don't personally understand the value of something that has no actual value. You all can do whatever you want, and I don't care. Okay?
All right. That sounds definitive. Bitcoin hit a new high today.
I could care less what Bitcoin trades for, how it trades, why it trades, who trades it. If you're stupid enough to buy it, you'll pay the price for it one day. I've also told people that it can trade at $100,000 before it trades to zero. Tulip bulbs traded for $75,000 once, something like that. The only value of a Bitcoin is what the other guy will pay for it. And I think, honestly, there's a good chance that Bitcoin, a lot of the buyers out there are up there jazzing up every day so that maybe you'll buy it too and take them out. And I quite mean that, by the way. These People are very good at manipulating the press these days and getting news out. And so every day, you have CNBC, nonstop Bitcoin. Who cares about Bitcoin? I mean, the world economy is so big. We move, JP Morgan alone, these companies, $6 trillion. We move all this money. And Bitcoin in total is all these currencies are $50 billion, maybe $1 billion trades a day. And the other thing I've always made of Bitcoin, governments, and this is not a technological statement, governments are going to crush it one day. Governments like to know where the money is, who has it, and what you're doing with it. And in case you haven't noticed, okay? And governments like to control their currency, like to control their own economy. So China's already put curbs on it. Japan, they say Japan accepted Bitcoin. No, they didn't. What I gathered Japan did was they call it J-coin. It's a yen cryptocurrency. It's not a non-fiat. And there's a big difference. People have said legitimately, okay, it's close to gold. Not really. Gold is limited and has been around a long time, and it's close to a fiat currency. Not really. A fiat currency is where the government says, this is your legal tender. You have to give it and accept it. And there's a central bank. Now, of course, they can misuse it, the central bank, and inflate it. So there is a use case for Bitcoin. If you live in Venezuela, North Korea, or if you're a criminal, great product. I mean that. It's better than cash or deposits in that country, Cuba, But this is the last time I'm ever going to answer a question about Bitcoin because I really don't care.
Bugs, any other investor group I've ever seen, gold holders on the other side of the equation, they're a bit skeptical. They've been burned. They're a bit cynical. And even the advocates aren't really willing to commit more than 10% of their portfolio. And it leaves you with the last question, which is, if you're only going to invest 10% of your portfolio in gold, what are you going to invest the other 90% in?
I might pump, but I don't dump. It's not a case of, I definitely do not believe in getting the price high and selling or anything like that.